This is one of those moments where the entire crypto space feels unusually quiet, yet unusually tense at the same time, because something that was once dismissed, laughed at, or ignored is slowly being discussed again. This idea that XRP could be facing a major repricing event in the future. Not tomorrow, not next week, and not as a guarantee, but as a serious topic of discussion based on long-term market structure, utility adoption, and global financial shifts. Before anything else, it's important to say this clearly. This is not financial advice. This is not a prediction, a promise, or a guarantee. This is an educational discussion based on publicly available information, historical market behavior, and emerging narratives within global finance. Crypto markets are volatile, risky, and unpredictable. Anyone watching should do their own research and make decisions based on their own risk tolerance. Now, with that out of the way, let's talk about why XRP is even being mentioned in conversations involving large valuation scenarios, and why some analysts, researchers, and long-term observers believe the asset could be dramatically misunderstood by the broader market. XRP was not designed like Bitcoin. It was not designed to be digital gold. It was not designed to be a meme, a store of value experiment, or a speculative toy. XRP was designed as a liquidity tool, specifically for cross-border value transfer. That difference matters more than most people realize. Traditional cross-border payments are slow, expensive, and inefficient. Banks rely on Nostro and Vostro accounts, which require trillions of dollars to sit idle around the world just to facilitate international transactions. This system hasn't fundamentally changed in decades. It's expensive, it's fragmented, and it's outdated. Ripple's core proposition was simple in theory, but massive in implication. What if liquidity didn't need to be pre-funded? What if value could move across borders in seconds instead of days? What if settlement could be final, transparent, and cheap? XRP was built to be that bridge asset, a neutral digital asset that could be used between any two currencies, any two institutions, anywhere in the world. Now, for years, the biggest obstacle to XRP wasn't technology, it was regulation, specifically regulatory uncertainty in the United States. That uncertainty froze adoption, scared institutions, and kept XRP in a strange limbo while other crypto narratives exploded. But regulation doesn't stay uncertain forever, and as frameworks begin to emerge globally, the conversation around XRP starts to shift from speculation to utility. Here's where the idea of repricing comes in. Repricing does not mean hype-driven price spikes. It means a market reassessing an asset's role, demand, and function within a larger system. For example, commodities reprice when supply-demand dynamics change. Currencies reprice when global trade flows change. Stocks reprice when future cash flows are reassessed. If XRP were ever to be used at scale as a liquidity bridge for high-value transactions, the question becomes less about speculation and more about math. Global cross-border payments move tens of trillions of dollars annually. Even a fraction of that flow would require significant liquidity. Liquidity is not just about transaction volume. It's about velocity, availability, and trust. Some analysts argue that if XRP were used in large value settlement environments, its price would need to reflect that role to function efficiently. Not because of hype, but because higher value per unit allows less friction when moving large sums. However, this is where many misunderstand the discussion. Saying that something could theoretically reach a high valuation is not the same as saying it will, or that it's imminent, or that anyone should invest expecting that outcome. Markets are complex. Adoption takes time. Institutions move slowly. Regulation evolves unevenly across countries. And technology adoption is never linear. Another factor often discussed is token supply. XRP has a large total supply compared to assets like Bitcoin. That supply is frequently used as an argument against high valuations, but supply alone doesn't determine price. Demand, utility, velocity, and use case matter just as much. For example, fiat currencies have massive supply numbers, yet their value is tied to trust, usage, and economic activity. Again, this is not a direct comparison, but it illustrates that simplistic metrics rarely tell the full story. One of the reasons XRP remains controversial is because it sits at the intersection of crypto and traditional finance. It's not fully embraced by either side. Crypto purists dislike its institutional focus. Traditional finance remains cautious because of crypto's reputation. But sometimes, being in between is exactly where transformation happens. solutions. If digital assets are ever integrated into mainstream financial infrastructure, they won't replace banks overnight. They'll be absorbed, regulated, and adapted, and assets designed for interoperability may have an advantage in that environment. Still, it's critical to emphasize this again. High-price scenarios are hypothetical discussions, not expectations. Anyone claiming certainty in markets is either misinformed or being dishonest. Crypto history is full of narratives that sounded inevitable and then failed. It's also full of ideas that seemed impossible until they weren't. The truth is, no one knows how this will play out. What can be said is that XRP's story is not over. It's not a relic of 2017. It's not just a chart. It's part of an ongoing experiment in how value moves globally. Whether that results in massive adoption, moderate use, or eventual irrelevance depends on factors far beyond any single company or community. Technology must work, regulation must align, institutions must see value, and markets must agree. For viewers, the most responsible approach is curiosity without attachment. Learn how these systems work. Understand the risks. Question bold claims. Avoid emotional decisions. And remember that no video, no influencer, and no headline should replace critical thinking. If XRP succeeds, it won't be because of hype videos or price predictions. It will be because it solved a real problem at scale. And if it doesn't, it will be another lesson in how difficult it is to change global financial infrastructure. Either way, paying attention doesn't mean believing blindly. It means staying informed, grounded, and realistic. That's how you survive long enough in any market to even have a chance at benefiting from it. And one of the biggest mistakes people make in crypto is assuming that awareness alone equals success. Just because something is talked about doesn't mean it will automatically be adopted. History shows that real adoption happens quietly, slowly, and usually without excitement. By the time the average person realizes something has changed, the shift has already been underway for years. This is especially true in finance. Banks, governments, and large institutions do not move based on emotion. They move based on risk management, regulatory clarity, and cost efficiency. If a system does not reduce friction, lower costs, or increase reliability, it doesn't get adopted, no matter how innovative it sounds. That's why the XRP discussion continues to resurface, not because of price charts, but because of infrastructure conversations happening behind the scenes. Central bank digital currencies, real-time gross settlement systems, and faster payment rails are all being explored globally. These systems require interoperability, they require bridges, they require liquidity. Now, does that automatically mean XRP becomes the global standard? Absolutely not. There are competitors, there are alternative technologies, there are political considerations, there are national interests, there are legacy systems that resist change. But the idea that digital assets will play no role at all in future settlement systems is becoming harder to defend. Too much money is moving too slowly, and too many inefficiencies remain unresolved. Another important point often overlooked is time horizon. Many market participants think in weeks or months. Infrastructure operates on decades. When people discuss long-term valuation scenarios, they are not talking about next year or even 5 years from now. They are talking about generational shifts in how value moves. That's why short-term price action can be misleading. Markets can undervalue or overvalue assets for extended periods. This happens in stocks, commodities, and currencies. Crypto is no different, just faster and more volatile. There is also the psychological aspect. XRP has one of the most polarized communities in crypto. Some people believe it's destined for massive relevance. Others believe it will never recover. Extreme opinions usually indicate uncertainty, not clarity. Reality is often somewhere in the middle. Another factor to consider is that markets do not reward effort or intention.